Hello, what's up guys? Welcome back to the channel. Today I'm going to show you something very important, and I hope you get value before the end of today's video. You know, one of the best ways to trade is to follow institutional footprints, and following their footprints will always put you at a better side of the market. Once you understand institutional trading style and you apply institutional trading style to your trading strategy, you will always be at a better side of the market. So let me show you some of the things quickly. Mind you, if you are totally new to the channel, please consider subscribing to the channel. Here is Born to Trade and I'm Solomon Wisdom. So consider subscribing to this channel because I always teach and release content about smart money and how you can actually make money from the financial markets trading with smart money concept. Now let me show you quickly. Looking from here, I clearly see that price impulsively move up, and here we got a pullback. And the way we trade with smart money concept, you can agree with me that we have a very good demand zone over here. I hope you can see that this is a very good demand zone, and you can clearly see that price came back, tap into our zone, and over here we got a move that broke structure to the upside. One thing you need to understand as a smart money trader is price cycle. If you understand smart money price cycle, I promise you it's gonna help you improve as a smart money trader. You understand the price cycle that once we have maybe a little range and we have an expansion out of the range, you understand things like this. So once we have the expansion, you all know that we have a zone. Once we have a zone, we will definitely get a retracement to that zone before we reverse out back to that direction. I hope you understand price cycle, and I know this is something that almost all the smart money traders are familiar with. Okay, so understanding price cycle, looking at what happened here, so you can see it here that we have a very good demand zone over here. Here's the expansion which confirms this demand zone. Looking lower, you see we don't have any inefficiency, there is no imbalance to feel right here. So our zone, the expansion, retracement back to our zone, and here is the expansion. Very simple concept. I hope you can clearly see that. So moving forward, what else can you see? Here is the break of structure. We have a break above this high, and you can now see the flow of the market. You can now see the flow of the market that we are in an uptrend because we got a break of structure over here. So right now, what are we gonna do? You're gonna map out your zone. So if you map out your zone using this candle over here, that's not bad. As you can see, price came back to the zone, respected the zone, and here we have a move before price reverse, and now we have another zone down here which is still a valid zone, because price reversing right here means that it's coming to mitigate the zone that is lower. And over here, what can we see? Price was building liquidity. I hope you can clearly see that. So price built liquidity over here, which makes this particular setup a high probability setup, because we got the expansion. Price was retracing back, it didn't make it to the zone that is lower here. Instead, it mitigates this zone right here. I hope you can see that, mitigates the zone, push higher, comes back. Now it's built a trend line liquidity, and you all understand what liquidity is all about. Retail traders that are looking at this, they see it as a support zone which they'll be looking to buy from, and I won't say they are wrong. I won't say they are wrong because they are getting the direction right. They know that actually the market has to move high to take out this high over here. They are correct because price has to move higher to take out this high, but the problem here is that they are not choosing the zone correctly. They are failing to choose the correct zone. This zone is not the actual zone that we take out this particular high over here. That's not the correct zone. When you trade with institutional footprints, you understand that they actually come back to mitigate this zone. Once they've built this liquidity, what we know is that they will clear this liquidity, tap into this zone, and price will now get momentum to take out this high. This is the kind of candle I like to see in the markets as a smart money trader. You see this candle right here? This is the kind of move I like to see in the market, because when I see this kind of move, it tells me that institutions have stepped into the market. Yes, this kind of price action over here, we do see them, and most times it do play out. But seeing this particular one over here, this gives you a clear understanding that yes, institutions have stepped into the market, and this is what I call institutional candle. I hope you can clearly see that. So this is a very good and valid break of structure over here. And as a smart money trader, looking from your left, I always tell you, once you want to trade with smart money concept, always look from your left, because the left side has the information you need to take a trade. Okay, so don't just come and take trades from the market. Look from your left, see the previous price action, read the information that the market has been printing over and over again before you decide to take a trade. So this is where I'll be interested in taking trades, because you've seen the order flow, you've seen that price is mitigating zones and it's moving to the upside. So when we got this expansion here, we have to apply the price cycle. Here is the expansion, a very, very rapid expansion out of that area. Tells you that institutions have stepped into the markets. What do you have to do? You have to identify your point of interest. So you see this down close candle, this is your demand zone, but you can include this bullish candle. Although we see another bearish candle over here, we didn't have momentum, but including this bullish candle alone is enough. That's okay. Waiting for the price cycle to be complete, you need to see price retracing back to this zone to mitigate this zone. Okay, as price is retracing back to this zone, what do we see price do? We see price building what we call a trend line liquidity. And one thing I want traders not to do each time they ask for advice, a lot of traders, when they see this move, you see this expansion right here, they try to jump into it. See, let me tell you one thing. Once you miss a trade from a favorable price, let's say somewhere like here or here, once you have your confirmation and you enter a trade somewhere here, it's okay. But trying to see price, you see price that price is bullish and you're trying to jump into a trade over here, it's not good, because most times you always see price reversing, because the price cycle must be complete. You understand? You see price expands and trying to jump into a trade, it's not right, because one thing you need to know is that price will always retrace to mitigate zones before it continues. So the best thing I will advise you to do is to always wait for price to come back and mitigate before you jump into a trade and you ride with smart money. So this is the easiest and the safest way to trade. Understand? Price was building liquidity and we have tons of imbalance that needs to be filled, and you can see from the price action here, some of them have been filled. So this zone right here is where I'll be looking to get involved in a trade. I hope you can see that. I'm looking to trade from this zone, and depending on how you trade, depending on your entry confirmations, or you take 50% of the zone, whichever way, I won't be talking about entry today. Whichever way you trade, you set your order and you wait for price to come back and tag you into a trade. So pressing price forward, you see trend line liquidity over here, and they will jump into taking early buys. They will be induced into taking buys, and what you see is that price will take them out of the trade, and now you see price taps into our zone. So if you took a trade from here, you'll be tagged into your trade. And talking about trade management, one of the ways I manage my trade once I get entry from my zone is, you see all these little zones over here, most times they are very reactive. When you see price moving to this kind of zone, I take some of my profits from this kind of zone, because they are very, very reactive and they can actually push price lower before price continues to move to its direction. Okay, so pressing price forward, now price starts to move and now it retraces back to our zone before momentum kicks in and it starts to move. So just like what I just explained right here, you see this zone, price hits the zone and it retraces. So taking partials from this kind of zone is still okay, depending on how you manage your trade and your trading plan. And over here you can see the price came very close to the second point of interest here, and you see that retracement again. So we all are humans and we have our way of reasoning, and everyone knows how to control his or her emotions. Since I know these zones can be very reactive and they can actually hold price for a few minutes or few moments, what I do is I take some profits at this kind of zone, and once I hit my main targets, yeah, I close some of my positions and I just lock in my profits till I get taken out of the market. So this is how I manage my trade going forward. And you can see price hits the third target, and you see that retracement. So this is how it goes, and this is how to follow institutional footprints. You see that expansion, retracement, and the reversal. The same thing here: expansion, retracement, reversal. So expansion again, see retracement and the reversal. So this is the way it works. And so what I need you to do now is to go back to your price charts, try to practice some of these things, backtest, and be the best trader you can.